Hey, what's going on, my friends? We have another weekly updated video taking a look at our dividend portfolio where we contribute $25 a week. And as you guys can see, we're currently up to $1,852.07. But let's dive in to see how things are currently going, because over the past day, you can see we're actually up 0.53%, a nice rebound from where we were last week. But let's see, because things did take a bit of a dive. However, a week ago, you can see we're actually up 2.09%. And then the past month, though, all right, I knew we were going to see a little red in here somewhere. And we're down 0.57%. Nothing. That's peanuts. And then the past quarter, we're up 2.27%. In 1 year, in all time, we're up 11.63%. Not too bad, my friends. It's very important that you guys start to invest your money. Get your money to work for you, because if you have it all just sitting inside of a savings account, whew, inflation is going to kill it. It's going to kill your money, your hard-earned cash that you've been working hard to save up. Well, yeah, that money is losing its value every day just sitting inside of a savings account. Of course, yes, we want to have that emergency savings. Maybe you have another savings account for, things that you need access to, kind of like a carryover account, and I've made a few videos actually diving into the various types of accounts you should have. But ultimately, you don't want all of your money sitting inside of a savings account, especially when inflation is going to be kicking in the way it has been working and the way it's going to be working over the next few years. That said, you absolutely want to consider investing your money. Now, you don't need to have a dividend portfolio like mine. I actually also have a growth portfolio. Tomorrow, we release the growth portfolio update. So if you haven't already subscribed to the channel, definitely hit that subscribe button and hit the notification bell, because then you can stay up to date on tomorrow's growth portfolio video and other videos that I have to help you with making, managing, and growing your money. And while you guys are down there, give this video a nice thumbs up. It does help with the YouTube algorithm, and it also shows me that you guys enjoy and appreciate this type of content. Now, let's dive into our portfolio, because like I said, all time we're up 11.63%, which is a total gains of $127.73. And as you can see, of that, our earned dividends is about $41.84. Now we'll dive into the specifics there, but really quickly, if you are new to the channel, well, we started this back on February 1st with $100, and then we were contributing $25 a week up until we got to March 5th, where we contributed an additional $500. Now, that money came from the stimulus check. Yes, we got $1,400. We put some of that money towards bills. We put some towards maybe you wanted to splurge a little bit, go out for a nice dinner, or buy a pair of kicks or something, some Nikes, some Jordans, whatever. And then you invest the other portion. Now, the best approach would have been just put it all towards bills and then invest it. If you had no bills, then invest it. But of course, you know how tough it is, temptations. You want to enjoy life a little bit. So I get it. But we decided to add $500 of that $1,400 stimulus check into our dividend portfolio. And that helped speed it up in terms of getting this nice boost that we got here, to increase, or I shouldn't say increase, but help, again, speed up the process, because we would have gotten to where we are today at some point, but having that additional $500 to work for us was more money to get working. So instead of having, three people, let's pretend your money is our employees of yours, and instead of only having 3 employees, now with that additional 500, we got maybe 8 employees. Each 100 is 1 employee, whatever. So now we got 8 employees to work for us. Don't you think you're going to be able to make, get more progress, get more done, be more efficient with, more people that are working for you? Of course, it all depends on the caliber of the quality of the individuals working. But for the sake of this example, just visualize it being that someone has 3 people working for them and someone has 8 people working for them. They're all just as effectively efficient with their work. They're just as good as, no difference there. But someone has 5 more people to work for them than the other individual. Of course, that person with 8 employees will most likely be more efficient, will most likely get more done, probably be a more successful business. That said, why wouldn't you want to add more money to your portfolio when you can? So if you get, let's say this week, next week, you happen to come across an additional couple $100 than what you normally have, absolutely consider adding that to your dividend portfolio or some sort of portfolio. Again, the more money you have in here, the more money that's going to work for you to get, growing your cash, your hard-earned money. And that is the goal. You want your money to grow. You want it to work for you. And some people don't believe, passive income's not legit. Passive income doesn't work. I mean, this is essentially a form of passive income because you are getting your dividends, right? I mean, the actual market gains of the stock price, that's going to fluctuate. These might drop and they might go up, but the earned dividends is what we are always going to be getting because we have shares of the companies we have, and they all pay out dividends. So that's the beauty of this portfolio. That's why you want to consider having a dividend portfolio, getting that passive income and getting it to work for you. Because I'm not here, I can go out and do some other work, but my money is going to always be over here, hard at work, making me some money. So let's dive into our portfolio and see how things are going all time. And bam, here we go. So as you guys can see, of course, to no surprise, Newt is at the top of our list once again with a 46.22% return. Killing it. And then we have PepsiCo at 33.57%, followed by Procter & Gamble at 23.31%, then Coca-Cola at 15.61%, followed by Realty Income Corp at 11.41%. JP Morgan Chase at 9.02%, Johnson & Johnson at 6.27%, and Innovative Industrial Properties 6.11%. 3M and Verizon are down in the red again. This week, 3M is at negative 4.53%, and Verizon is at negative 10.84%. Now, I'm happy with the way things are going. I have no complaints. I mean, we're up over 10%. We're at 11.63% for our returns with this portfolio. And like I said, we started this just back on February 1st with only $100, and we're already up to $1,852. I'm loving it. If this money was sitting inside of your savings account, you can absolutely guarantee you would not have this much money. It ain't happening because there are no savings accounts that are giving you interest that have a return of 11.63% or 10% or 9%. Now, I will say, and I got to make a video on this, DCU, which is my local credit union, does have it's like a 6% on your first $1,000, which I don't really know of any other banks, credit unions that are doing anything remotely close to what DCU does with that first $1,000. Of course, it drops drastically after that $1,000. But again, hey, if you just need, you want another additional account, maybe you have that emergency savings that you can utilize it as an additional emergency savings or something, at least you will get that 6% or the high interest on that first $1,000. Video I got to make for another day. Maybe I'll do that after this, actually. Because I don't think enough people know about DCU, and I've been a member with them for over 15 years. I'm a huge fan, and I believe a lot of you guys can probably benefit by working with a credit union like them. But keeping it moving, talking about our dividend portfolio, again, this is looking really good. But we want to dive in now really quickly to see where this earned dividends are coming from. Not really a drastic update from previous weeks. But New Tech is still at the top at $8.84, followed by Realty Income Corp at $4.18, and then Verizon Communications at $4.15, Coca-Cola at $4, and then 3M at $3.42. So something to keep in mind here is that, we're seeing within these top 5 companies, you see basically companies that are at the top of our list and then companies that are performing the worst. And so don't be too discouraged when you see, someone that is like Verizon, for example. They were at the bottom of our weekly updated list a moment ago, down like 10%. However, you can see Verizon is actually the third highest paid company we have in our portfolio that's given us dividends. So, does it cover the difference of how much we're down? No, it doesn't. Not now. But in the long term, in maybe a year from now, this will be drastically higher. And that percentage of how much they're down will hopefully also be, will not also, but will hopefully be down lower. And, the long term goal is that these earned dividends will continue to work for you, and you're just going to make more money because it's going to get thrown back into the mix. And compound interest is a beautiful, beautiful thing. So, hey, this is looking good. No surprises here. Nothing is catching me off guard. Everything is pretty much aligned with what we want to see, which is that continued, upward trend, to the right and up. This is the direction we want to continue to go. When we look in here at the past month, I do want to show you this. You can see this nice dip here. You can't be discouraged. And I said this last week when we were down quite a bit. This is going to happen from time to time. And we're going to, the market's going to crash at some point. It's going to correct itself. And a crash isn't a bad thing. It is meant to help correct things and help level the playing field, so to speak. Because sometimes when things keep running and it just goes so high, at some point it has to come back down and even itself out. And so you can't be discouraged when things start to tank. You have to just continue to let your portfolio work its magic. If you have good, sound companies in your portfolio that you believe in, when it does a dip like this, view that as a buying opportunity, because most likely, again, if it's a good company that you truly believe in, that's, good fundamentals, good leadership and so on, good products, good service, it's probably going to continue to go up. There might be these little dips, but don't be discouraged. Continue to just let your portfolio do its thing. You don't do anything, right? You set that autopilot and it does everything for you. You just got to make sure you got money going into your checking and savings account to make sure it's properly being added to your portfolio. So my friends, yeah, I think too often, like I said, there are people out there that are kind of complicating things that don't need to be so complicated. As you guys can see, we're up quite a bit with our dividend portfolio. We started this back on February 1st with $100, and we're already getting close to that $2,000 mark. Not too bad, my friends, not too bad. So that said, my friends, definitely consider starting to invest your money in a dividend portfolio or a growth portfolio using M1 Finance or another broker. I do have a link down below where you can start to work with M1 Finance. If you fund your account, you will get some free, I think it's money right now. I think it's like $30 or $50, or it might be some free stocks. They always have promotions. Another one of my favorite brokers are Webull, who also gives you some free cash or free stocks when you start and open a fund an account with, like just $100. They'll give you some money. They'll give you some free stocks. So definitely check out some of those links down below in the description area. I do think you guys will find some value there. And yeah, let me know what you guys think about our dividend portfolio. How are things going for you? Do you have a similar portfolio? Is it different? Did you kind of replicate this portfolio? And something I always try to stress to anyone who's new to investing is, when you see a company in my portfolio that happens to be in the red, well, that means it's down on me. But if you buy them at that time, well, you're going to have a better price than what I have. So moving forward, if you were to buy, let's say Verizon, anytime Verizon is in the green moving forward, if you bought them now while I'm in the red, that means you're going to be up even bigger than me. So something to keep in mind. Sometimes people will see a company that's in the green and jump on it when it's at its peak and then it tanks. Whereas a company that's in the red, yeah, it doesn't seem as appealing because it's not doing so hot right now. But that is when you want to get on board with it because it's on sale. So I hope that makes sense. I hope you guys are getting your money to work for you, making this money through your dividend portfolio, growth portfolio, some sort of portfolio. But yeah, baby, we love these passive incomes. This is passive income. I worked, I put my money in there. I don't have to do anything at this point, and it's just going to continue to do its thing, work its magic, and make me some cash, make me some money. And that's what it comes down to. So on that note, I'm going to wrap it up there. I hope you guys found this video motivational, encouraging, helpful as you start to get your money to work for you. Grow that hard-earned cash. And use those links down below to start to invest with M1 Finance or Webull as well. But all right, my friends, I gotta keep it moving. Much appreciation for watching. Like I said, subscribe to the channel, hit that like button, and leave a comment down below letting me know your thoughts about this dividend portfolio. Do we want to make any changes? I think we're gonna keep everyone for now, but hey, Verizon has been in the red for quite a bit. Do we want to get rid of them? I don't think so, but let me know what you guys think. Comment down below with your thoughts. And yeah, hopefully everyone has a great weekend. Definitely check out tomorrow's growth portfolio video update. And like I said, I got to keep it moving, but I'll see you in the next video. Peace.